Hey, Sean, what's going on in mortgages, man?
Well, the rates are low right now. We've had a great run here really since about September of last year, but right now we're seeing conventional rates in the high threes, 3.875, 3.75. Government rates down as low as 3.25. So right now, it sounds like it's a good time to buy. There's some good properties out there. We're seeing actually a lot of move-up buyers. We've captured some equity here in San Diego in the market over the last 2 years, really. And so I would definitely encourage your listeners to reach out to their trusted mortgage professional. We're seeing in our practice a lot of people coming in, they're able to lower their payment, remove their mortgage insurance because of that equity increase, or just access some of that equity for home improvements and so forth. So
Nice.
if anyone's out there, they don't have a trusted professional that they trust to work with, I remember my team are happy to help them out.
What's the interest rate? What's like the cutoff? Like if, say, I have a 4.5, should I get a refi at this point? Or
Yeah, it depends. I mean, the rule of thumb out there that you see people talk about is they want a 1-point improvement, but it depends. California and San Diego in particular, a lot of people have big loans, so if you save 0.25%, sometimes that can be a couple $1,000 a year. So
even if it's $100 a month, or whatever, man, I want that.
Yeah, I mean, you need a good mortgage guy, and I know you have one.
I absolutely got a good one. Our kids go to school.
Nice.
Sean, tell us about this new FHA flip rule that came out, and what's that going to do?
Sure. So it's actually, they're going back to the old flip rule, which they had before. They kind of relaxed it for a few years here during the real estate crisis, but basically when an investor purchases a property, for it to be financed by FHA financing, they need to wait 90 days to go into contract on that. What they don't want is they want investors to come in, buy a distressed property, jack the price up artificially, and then have an FHA buyer come in there and finance something that's not really worth what they're buying it for.
Yeah.
So they're going back to the older rule, which requires the investors to wait those 90 days. There's good and bad in it. When they were allowing it, they were putting special requirements on it, so they were requiring extra appraisals and those sort of things to protect the lender and to protect the buyer.
Yeah.
So there were some controls in place. Don't get me wrong, it wasn't the Wild West days of 2005 and 2006. They're still underwriting, so and they're still appraising the properties. So it's just going to tighten things up a little bit.